Today we're going to talk about FHA loans. So FHA can be a really great loan product in order to get into a house. The highlights of it are 3.5% down. Yes, that is the minimum down payment is 3.5%. And in certain parts of the country, you can actually put 3.5% down with FHA, whereas with conventional, you'd have to do 5% or more. So FHA can be a really great tool to get into a house if you don't have a huge down payment. Okay. It is important for you to know that FHA loan limits are different than conventional. So you may qualify for, let's say, a $400,000 conventional loan, but with FHA, it's only $260,000, and that could be because you're in a county where the FHA limit's very low. So very important to note from this video is you want to look up your loan limit in the county that you're shopping in. Yes, look up the loan limit for FHA in the county that you're shopping in. Now, do you have to be a first-time home buyer? No. Are there income restrictions? No. You can make $1 million a year and do a FHA loan. There are not income restrictions on FHA. Okay, that's very important. Now, if you were doing a down payment assistance program in addition to FHA, then at that point you might see income restrictions as well as a first-time home buyer requirement. But for generic everyday FHA, you do not have to be a first-time home buyer. You can actually own another house. Like if you have a house, let's say you bought a house with VA 5 years ago, you could buy a house with FHA even though you have that VA house. So very important. Now, what are the pros? The pros with FHA is it's more forgiving on debt to income. So what that means is that whereas with a conventional loan, it's very hard to get the loan approved if the debt to income is over 50%. With FHA, you can go up to 55 pretty easily. So there's a little bit more flex there. Another pro of FHA is that if your credit is not amazing, right, you can get a better interest rate with FHA. FHA is much kinder to lower credit scores than conventional. And the reason is that FHA is a federally backed loan. So when lenders are looking at FHA versus conventional, FHA is a lower risk product because it's federally backed. And the way that lenders price interest rates is based on risk. Okay, and you're like, wow, this is great. This is great. I want to do FHA. Okay, wait. Wait, and I'm not saying it's bad, but let's talk about two things with FHA that are different and not always the best solution. So FHA charges a 1.75% premium upfront that gets funded into your loan. Yes, so you're putting down 3.5%, but they're tagging 1.75% onto your loan balance. So there is a big cost to do that loan. And that's before you have your title and escrow fees or your attorney fees, your lender fees. That is just FHA across that board. That 1.75% fee is going to be financed into the loan. Even if you put 20% down, even if you put 50% down, they are tagging that 1.75 in, okay? So that's very important. The next thing is that if you do FHA with 3.5% down, you will have mortgage insurance for the life of the loan unless you refinance or you sell the house. By refinance, I mean you refinance out of FHA. By selling the house, I mean you sell the house. So if you're doing 3.5% down with FHA, you will pay mortgage insurance. Okay? If you're doing 10% down, you will pay mortgage insurance, but you will have the ability to remove the mortgage insurance at some point. If you do 20% down, you're still paying mortgage insurance until it hits that window that it will allow you to get rid of it, and it's long. So that's something people constantly don't understand about FHA, and if you're working with a lender that hasn't done a lot of it, they totally would think that you wouldn't have mortgage insurance with 20% down, but that's inaccurate. So that funding fee and the terms on the mortgage insurance are definitely more brutal than conventional, okay? Those are the two negatives with that program. Now, another positive is that if your credit is not excellent, the mortgage insurance is cheaper with FHA. So what I'll see a lot of is if someone has like a 620, 630, 650 credit score, that FHA payment is going to be a lot lower on a monthly basis. So then it comes down to, okay, do you want the lowest monthly payment Or, you know, are we thinking that this house is going to appreciate and what the long term is? And if you qualify for conventional. Another reason people use FHA is if they don't meet the qualifications for a conventional mortgage. So sometimes what I'll see is I'll be looking at a file and I'll be like, what? You know, we always run it through what's known as desktop underwriting. Fannie Mae DU and Freddie Mac LP. Okay, those are the names that you'll maybe not remember this, but I hope it clicks there. And so we're always running stuff through what's known as desktop underwriting, and we're trying to get an approved eligible. Sometimes what I'll see is I cannot get an approved eligible conventional with a 3% or 5% program, but I can get FHA. And so in circumstances like that, we have the conversation with the client of, hey, look, I can't make this work, but I have this option. Or if someone's really driven by payment, if they're like, look, Jen, I don't care about the 1.75. I don't care that I'm gonna have mortgage insurance until I refi or sell the house. I need a payment I can afford every month, FHA. Okay? And as long as you guys know all of this, it's a great loan to get into. What frustrates me in the industry is that there's a lot of lenders that don't tell people, you know, everything about FHA. They just go, oh, I can get you the smoking rate and the mortgage insurance is cheaper. And everyone goes, and of course, the disclosures are going to tell you everything I just told you. But in order for you to make an informed, educated decision as a consumer, you need to know these things up front. So FHA is a great loan. It can definitely open some doors. If your credit's not perfect, like the payment difference can be substantial. I mean, we can talk about, I've seen a full % difference in rate, and I've seen mortgage insurance, you know, half cost with FHA. However, if your credit score is 800, if your credit score is 760, often conventional will be cheaper, especially when you get into that mortgage insurance. So most important thing is that FHA can be a great loan. Just because a lender's saying that you should do FHA does not mean they're trying to steer you. You just want to have the conversation of, okay, cool, you know, what did conventional look like? And it may be as simple as, well, we couldn't get a conventional approval, but we can with FHA. Okay. Or it could be, well, with conventional, we can do conventional. We're happy to do conventional. Here's the payment differences, totally up to you. We always go through that with people and inform them so that they can make the choice that's best for their personal situation. So I hope this has been helpful. If you have any questions or comments, feel free to reach out. I actually, when I started in the business 14 years ago, all I did was FHA and VA. We didn't have mortgage insurance right after the crash. So FHA all day, so I can pretty much answer anything you guys have because I'm sure I've hit it. Every weird scenario, I think I hit it. Thanks for watching.